Hello traders and welcome to another weekly market forecast video. Hopefully everybody is having a great weekend and the market has moved as expected once again during the last week and especially from the beginning of the year. So we have seen the dollar index falling as we have been disclosing entering the ascending structure right here. So we have broke the lows from the 27th of January and we are heading lower as we said. So this week we can expect more downside. Some small consolidations are possible, but overall the market should remain bearish for the dollar index heading into the next week as well. So we can see dollar falling even more from the current levels as we have been expecting anyway from the beginning of the year. So that's the main idea for the dollar index. For the dollar yen, we have reacted last week and then we dropped again. So there are two possibilities for this pair. We would either do another fall to the downside before a reaction to the upside, or we are going to essentially hold these levels as a potential structure like that, and from here we can do something like that, remain choppy and then extend to the upside. So for the time being, we are still looking for more downside for the pair. It's a possible scenario that we get a bounce and a move to the downside. However, as you know, this is a risky type of scenario, which both scenarios can play out at this stage because we have got very close to this Fibonacci extension area down here. So if you are trading this pair at the moment, it's a high risk pair, so you should avoid trading the dollar yen at this point, because what we expected was this move towards the 152 area, which already happened. That was the higher probability move, and now anything that plays out in between, it's a less likely scenario and a lower probability environment, and this is the time that you should avoid trading when you don't have the probabilities in your favor in a massive way, which is also part of what we teach to our members in our membership service. Again, if you want to get in depth and understand the market properly and become successful in trading, the link is in the description and you are welcome to join us over there. For the euro, as expected, we have extended higher after this pullback. This was the view that we had even from the middle of January, to start the fight between the buyers and sellers before we go to the upside. So the euro should remain supported and we should extend higher to break this peak from the 27th of January. And we should aim higher for the 107, 108 area into the near future. For the pound dollar, similar to the euro dollar, we're expecting more upside. This was expected anyway, again from the middle of January. So we have got the first move, we have got our pullback, and now we are extending higher. We are expecting the pair to reach about the 128.29 area before any reactions to take place. So pound dollar should be supported towards this path as we have been disclosing from the middle of January. So the structure is on track for this target area. For gold, as we expected from the beginning of the year, we have reached a new all-time high around the 2,900 area as expected. The market is still on track to continue higher. This is going to be a pullback, either a flat one or a three-swing pullback, and the market should find support at maximum these areas down here. It doesn't have to go, but this is the area of interest that gold can find support for one more push to the upside. Of course, the bigger players have already benefited from this move to the upside, that our members knew way ahead of time that this was coming for the first quarter of the year. So now this is going to be a pullback for another new all-time high ideally, but of course the biggest profits, they should have been taken off the table already at the 2,900 area overall. But still bullish for gold, only looking for buy the dips opportunities as we have been anyway over the past few weeks and months down the line. Moving on to oil, the market has been behaving as expected after this peak from the middle of January as well. So we are bouncing around at these levels of the 70-73 area, but we are expecting this to be a short-term bounce for another fall to the downside. Ideally, we are expecting oil soon enough to break these lows from September and November 2024. So in the short term, we might get some bounces and some choppy price action, but eventually the main trend is bearish, as we have been saying for a long time for oil. And this will be our primary view heading into the next week onwards, heading into March. More downside for oil, but short term, there might be volatility and some bounces and choppiness in the market, which later on will resolve to the downside most likely. This is what we can see at this point. For gas, this reaction to the upside extended during the week, but we can still see the market falling down heading into this week onwards. It should be a consolidation, and based on this price action, we will know if the market is able to continue higher or if it's going to extend a lot of time into these levels at the $3 range, which is a very likely scenario that could waste the next 2 months trading in this range. So if you are trading this one, you should be cautious, and at the moment it's a high risk market to be trading because we can see the risks of a sideways market with no direction heading into the next month or so. And from the indices, the SPX S&P 500 cash index, same idea like we said last week. We expected the market to break to the upside. This is exactly what happened over here. And we should expect the market to break to new all-time highs heading into this week or onwards. So we should be able to see the market heading to the 6,200, 300 area sooner than later. Of course, on Monday, it's a US bank holiday, so the market will not be open. But from Tuesday, the 18th of February, the S&P can also open with a gap higher and start trading higher to finish the week to the upside. So this remains to be seen. But so far, we have broken above this sideways consolidation flag we had right here, and we should be aiming for new all-time highs into this week for the S&P 500. And lastly, to finish with this weekly market forecast video, we have Bitcoin. So for this one, we are still consolidating, as we have been indicating over the last 2 weeks, that the market should continue a sideways accumulation phase. This is exactly what we are doing. Ideally, we do not see any major moves happening into this week. We can still play around with this sideways price action, but eventually into the next 2-3 weeks, we should start looking for another push to the upside. So far, this consolidation can still extend into this week as well. So you have to be mindful if you are looking for anything in the short term. At the moment, it doesn't look very likely that could be the case, and more sideways consolidation should be the most probable path ahead. So that's it for this weekly market forecast video. Don't forget, if you are new here, to leave us a like and subscribe so you can always get updated with our upcoming content. If you are new as well, and you can also check out our previous videos, you can see our previous forecasts, how they have been playing around overall in a very successful manner. And also, if you are a serious person that is looking for in-depth, in detailed analysis for any market, whether it's a stock or a crypto, or whether it's Forex, indices, or metals, you can check us out with the link in the description. You can also see how we have ended the year of 2024 with 9 months of recommendations for our members, and this includes only shorter term trading recommendations. It does not include any longer term positioning that it could still be holded to our members, which we will only share that if we get out of any markets. So again, you can check us out with the link in the description. Unless, if you are, a very important disclaimer, we do not want to have anyone who is a gambler. We are only looking to support serious people that are looking for the long-term success in trading. These are the only types of people that we would like to have in our service. Like the members that we have at the moment, they are all sharing the same mindset and they are all successful during the last year with us, and they will be more successful if they are sticking to what we are actually sharing in the members only content and live sessions. So that's what we have for this weekend's video. So we will see you in the next video. Probably this midweek we are coming up with the video that we have been saying about more things about the retail trading sector and why most people fail. Very educational for anyone to watch. And also, if you are not subscribed to our Telegram channel, feel free to do so. The link is in the description, because we do share very frequently many posts right there for educational purposes and announcements. So you can always keep up with what we are sharing in Telegram as well. So enjoy the rest of your weekends, and we'll see you in the next video. Take care.